Biden there saying businesses and people who have money deposited with the bank will be able to access their cash from today. Well, listening to that with me was our foreign affairs commentator, Douglas Herbert. And Douglas, we'll talk about what Biden had to say in a moment. But first of all, let's rewind a little bit and let's understand what it is that actually happened and how serious was it?
What happened? What's going on here? For people who don't follow the financial sector, the banking industry day to day, who perhaps have taken their eye off the financial industry ball since the 2008 financial crisis, this is the second biggest financial failure in modern U.S. history after the notorious Lehman Bank collapse. We all can still remember, most of us, those images of hundreds of employees taking those cartons out of the offices of Lehman Brothers the morning after the large bank just came crumbling down. Look, the president, Joe Biden, just alluded to what happened. At the root of this is that the behavior essentially has not changed since the financial crisis. And it's not for lack, Nadia, of trying to change it. Now, it sounds like a bunch of jargon I'm throwing at you, but Joe Biden used the term the Dodd-Frank law. All that was a law passed by Congress following, in the aftermath of the 2008 financial crisis, aimed at trying to prevent it from happening again. How is it going to do that? By protecting consumers, those who have, ordinary workers, employees, people in the American economy, and also making sure big banks cannot have the reckless, risky behavior that led to the collapse of Lehman Brothers in the first place. Dodd-Frank, you can argue, was working. The law was passed. It was something put in place that actually put safeguards up against just the type of thing, this type of rampant, reckless betting by chief executives of big Wall Street banks, speculation, reckless, irresponsible speculation. Safeguards were put up to prevent that. What happened next? Well, what happened next in ensuing years since 2008, since Dodd-Frank was passed, you've had basically Wall Street chief executives fighting tooth and nail to weaken the law. And they won. They have succeeded in weakening Dodd-Frank. Many of its pillars have essentially been removed since then. And you actually had, under, let's name names here, under Donald Trump's administration, you essentially had Dodd-Frank all but being removed, all but being completely emasculated, to the point that we are back to an environment, a climate on Wall Street and among these big banks, Nadia, in which they can do whatever they want. In the case of Silicon Valley Bank, you don't have to be an economist. I'm not an economist. I'm not a Wall Street expert. But what I do understand is what they did is simple. They bet cash. That they got cash in the form of deposits. They kept only some of that cash in the bank physically. They took big chunks of it and they bet it. They bet it in ways that many would consider reckless. They didn't keep what is called a cash cushion, and that was the whole idea after the financial crisis. Banks should have a cash cushion, meaning that if there are hard times, something negative happens, investors suddenly want to withdraw their money from the bank, they will know that the bank has that money on hand for them to get physically in their hands. This was not the case with SVP. It was what you call exposed, as was another bank that was shut down, Signature Bank. So there's actually been a few bank failures in the span of 1 week. But the behavior hasn't changed enough. The bets are still too risky. And Wall Street executives, and especially at a lot of these banks, started running away with the money again and making bets that ultimately have a very negative, if you will say, to say the least, consequences such as this.
Well, let's talk then about the response of the Biden administration. Joe Biden there speaking just before markets open today in the United States, a bid to sort of reassure markets there. What's he proposing, and do you think it's going to work?
Well, what he's proposing is to protect consumers, to make sure that basically those who had deposits at this bank are made whole, as they say in the financial industry. Making whole means they'll get their money back. Under the U.S. deposit laws, the FDIC is the corporation that sort of regulates this deposit and deposit insurance. You're only insured for up to $250,000 in deposits, Nadia. That's a pittance when you're talking about, venture capital, Wall Street, startups, big companies. It's nothing. It's a grain of salt, $250,000. What Biden essentially did today is, don't worry, we're stepping in. The U.S. Treasury, the FDIC, the Deposit Insurance Corporation, and the Fed, the Federal Reserve itself, are all going to be stepping in to ensure that those depositors get their money back. The people who will not get their money back are the investors. As Biden pointed out, by the nature of capitalism, an investment is risky. If you make a bad investment or you take a risky investment, you stand to lose it. That's just what happened. The investors will not get their money back. The depositors will get their money back. The companies that put their money in banks like SVP or in other banks which might now feel a little bit fragile and exposed and vulnerable because investors try to pull money out, what the Feds are basically saying, you do not have to pull your money out of all these other banks. If you too are a startup or a tech company that has parked its money into a bank like SVP, don't worry about a run on that bank. Don't worry that you won't have your cash back. We're there. We have your back. We're stepping in. And he added one last thing, and this shows that he has his eyes on the electorate ahead of another fierce presidential contest. This will not be taxpayer money. This will not, the cost will not be borne by the taxpayer. So a little bit of a political element in there, reassuring people you'll get your money back, and it won't be you having to bear the cost of it.
Douglas Herbert, thanks very much indeed for your analysis. We'll have some more analysis on this in about 20 minutes' time as well. Douglas Herbert, though, thank you.